All right, ladies and gentlemen, the live stream had some bitrate issues, so I just want to quickly cover some of the highlights of my day as an MPW investor. So they had earnings, and as you can see, were popping off. Now, it's not that it was, some kind of amazing blowout where they crushed it or anything, but they did have some interesting highlights. So there was an update in the litigation. Now, the litigation I'm talking about is that late last month they sued the short seller Viceroy Research. Now, basically, what this company did is they sold a lot of stock in MPW short and then released a lot of negative research and reports about the company. Now, MPW and their management have kind of clapped back, okay? And as such, they filed basically a defamation lawsuit, and they are responding by filing motions to dismiss the claims before they reach a jury, arguing that Viceroy's, remarks or, the information or, I guess, the things that they released about MPW, the negative press, whatever you want to call it, were supposedly not meant to be fact, but actually opinions and commentary, dominated by colorful, hyperbolic language, but framed as research, right? Because they're a research company, right? So some of the things that they kind of accused Medical Properties Trust of were counteracted in a letter to shareholders that several articles have kind of summarized. The points that MPW emphasized in the letter were that they have a proven underwriting track record. They go into more detail on it. Their portfolio is well diversified and delivers strong performance. They carefully structure their leases to mitigate risk of tenant bankruptcy. The financial statements are carefully prepared in accordance with generally accepted accounting principles. And while Viceroy asserts that Medical Properties Trust engages in revenue round tripping, the fact is that is simply not possible to do in the following instances. So I'm guessing that these bullet points are instances where Viceroy accused them of round tripping. Now, by round tripping, it basically means that they somehow, bought something specifically from a tenant who then used the money they got from MPW to pay rent to MPW, sort of like a shell game where it's like, hey, to make our revenue look better, we're going to buy this thing from you, and then you just take the money that we just gave you and you pay us your rent out of that money. That's kind of, my understanding of what they were being accused of by Viceroy. They're saying that that's not only false but not possible in these instances. So pretty interesting thing with the lawsuit there. Now, regarding the financial portion of the earnings, I think the most interesting thing that everybody's wanting to look at is the FFO as it relates to the dividend. Now, our equity is still over 8.4 billion, down a bit due to some of the financial issues with the large tenant that was having trouble paying rent. But generally to be expected, but it's a pretty small contraction in the balance sheet. Nothing catastrophic from my view. So the FFO, 31 cents per share. The dividend is 29 cents per share. So dividend is covered, and they did confirm that the next dividend will still be 29 cents per share. Normalized FFO, 37 cents per share. So if you go off of that number, their dividend would be comfortably covered. And the adjusted FFO, it's a little bit closer to the market, 30 cents. But what this really means to me as a shareholder functionally is that no matter how you calculate the FFO, it's covering the dividend, at least for now. And I think as long as we see similar levels to this or higher for the FFO, I don't think we're going to see a cut to the dividend. And frankly, that makes me happy. And I think that that's probably the main reason why we saw a little bit of a jump in share price today. Maybe people are starting to realize that the dividend isn't in imminent danger like has been suggested by a lot of other people. And so they've kind of come back in. Now, regarding a short squeeze, I mean, that's anyone's guess. But I will say, like, I would consider that kind of a windfall situation. This is still pretty heavily shorted from my understanding. And as they say, you know, it takes a lot of short interest to get a squeeze, but I think you also need a lot of retail enthusiasm. I don't think this is necessarily going to catch on the way something like a GameStop or an AMC would. I think it's maybe too boring, not enough of a story there. I think it's just, this is a boring, value-based buy. And I think more than likely we will just see the share price slowly go back to close to, intrinsic value. So tangible book value on this is coming in at just over $14 per share. And I've been saying, pretty much since I started buying this company that it's about a $14 or $15 stock, more than likely. So that's why, I was interested when it was 10. I was interested when it was 12. Still interested today. I may, in fact, sell more puts and potentially average down a little more. My current average is around $10 per share. So, we're still below that, so I still have a chance to lower my cost basis and reap a higher return going forward if I so choose. Or I can just sit tight, collect the dividend, and wait. Either one is honestly perfectly cool with me. Not really in any rush with this, but I was kind of excited for the earnings just so that, we would start to see if, who is looking more right on this. And personally, I feel somewhat vindicated that my rationale for being in this was correct and that my investment thesis holds true. Therefore, I will certainly be hanging on for the foreseeable future. That's really all I wanted to say. Those are the highlights. Take it easy, everyone. Have a wonderful afternoon. Cheers. Oh, before I go, please do join the Discord. Comment below if you're in MPW. Give me a like, and please subscribe if you want to be a part of the conversation going forward. All right, that's all. For real this time. Adios.